Good afternoon. My name is Diane Norden, and I serve as the Vice Chair of the Financial Accounting Foundation. I'd like to welcome the stakeholders who are tuning in to this virtual meeting. Today's meeting will include reports from the FASB Chair, the GASB Chair, the FAF Executive Director, and we'll also receive a report about the latest activities of the Financial Accounting Standards Advisory Council, as well as a report from the Trustees Standard Setting Process Oversight Committee. But before we get to those reports, I have the great pleasure of announcing several new appointments to the FAF Board of Trustees. Christopher Haddo, Kevin McBride, David Miller, and Robert Kinney Pointer. Let me give you some brief background of these newly appointed FAF Board of Trustees. These new members will begin their terms of service on January 1st, 2027, and will fill the vacancies left by Trustees Manju Ganeriwala, Ted Goldthorpe, Brian Lewis, and me, Diane Norden, who complete their terms on December 31st of this year. Chris Haddo is the Vice President of Global Business Solutions and the Chief Accounting Officer of General Motors, and has more than 30 years of global finance and controllership leadership experience across complex multi-billion-dollar organizations. In his current role, Chris leads a global team focused on optimizing business processes to improve service quality, enhance customer experience, reduce complexity, and drive cost efficiencies. As Chief Accounting Officer, he oversees external reporting, technical accounting, accounting policy development, and internal controls, while also reporting financial results to senior leadership and the Board of Directors Audit Committee. Chris is an active leader in the financial reporting community, serving on Financial Executives International Committee on Corporate Reporting and chairing its Securities and Exchange Commission subcommittee. He has also been an invited speaker and moderator for leading industry programs focused on SEC reporting and financial disclosure. Kevin McBride has more than 30 years' experience serving as a finance executive and board leader in global accounting, risk management, regulatory compliance, and financial reporting in the technology sector. He currently serves as Executive Vice President of Accounting and Corporate Services at ServiceNow, where he oversees a broad portfolio that includes global controllership, treasury, tax, audit, risk, and controls. Previously, he held senior finance leadership roles at Intel Corporation, including Vice President, Principal Accounting Officer, and Corporate Controller. Kevin has also contributed extensively to the standard setting and financial reporting communities, including service as a member of the FASB Emerging Issues Task Force and former FASB Industry Fellow, and National Board Chair and Vice Chair of Financial Executives International, FEI. He is a certified public accountant and has earned a BS in business accounting from Oregon State University. David Miller has spent more than 25 years in investment leadership roles across private credit, private equity, public markets, and crisis investing. He currently serves as Managing Director and Global Head of Private Credit and Equity at Morgan Stanley Investment Management, where he leads the firm's global private credit and private equity platform and oversees investment strategy across direct lending, opportunistic and special situations credit, and private equity strategies in the US, Europe, and Asia. He previously served as Chief Executive Officer and President of Silver Bay Realty Trust Corp. And had held senior roles at the US Department of the Treasury, including Chief Investment Officer for TARP, where he helped manage a $700 billion portfolio during the global financial crisis and received the Treasury Medal for Distinguished Service and Leadership. Earlier in his career, he held investment leadership roles at Pine River Capital Management, HBK Capital Management, and Goldman Sachs. David earned an MBA from Harvard Business School and a BA in economics from Dartmouth College. Kinney Pointer has a distinguished career of more than 40 years in auditing, accounting, financial reporting, and intergovernmental financial issues, with extensive experience advancing government financial accountability and oversight. He recently retired as Executive Director of the National Association of State Auditors, Comptrollers, and Treasurers, NASAC, where he provided executive leadership to its affiliate organizations, led strategic initiatives, advised Congress and federal agencies on issues affecting state governments, and provided technical input to standard-setting bodies, including the Governmental Accounting Standards Board, GASB, and Governmental Accountability Office. Earlier in his career, Kinney held several leadership and technical roles at NASAC, served as a partner in public accounting, and worked as a senior auditor for the Kentucky Auditor of Public Accounts and the Kentucky Transportation Cabinet. He is a licensed CPA in Kentucky and holds both an BS and MS in accounting from the University of Kentucky. And I have the great pleasure of announcing one additional appointment to note before we move into our formal reports. At this time, I am pleased to share that Hillary Sallow has been selected to serve as the next chair of the Financial Accounting Standards Board. Hillary currently serves as the vice chair of the FASB and chair of the Emerging Issues Task Force. She will succeed Rich Jones, whose term concludes June 30th, 2027. Hillary's term as chair will begin on July 1st, 2027 and continue through June 30th, 2034. Hillary brings extensive experience as a standard setter, audit partner, regulator, and accounting advisor. She began her career as a postgraduate technical assistant, a PTA, at FASB, and later joined KPMG, where she rose through the ranks to become a partner in the audit practice in the firm's Audit Quality and Professional Practice Group. She rejoined the FASB in 2020 as technical director, became vice chair in 2024, and has played a central role in shaping and advancing the board's priorities and strengthening its engagement with stakeholders. Previously, she also served as Professional Accounting Fellow in the Office of Chief Accountant at the U.S. Securities and Exchange Commission. Hillary holds an undergraduate degree in Business Administration and a master's degree in Accountancy from the University of North Carolina at Chapel Hill. As a result of Hillary's appointment, the Board of Trustees is issuing a call for nominations to fill the position she will leave vacant. The new FASB member will complete a board of 7 full-time members based in Norwalk, Connecticut, with a 5-year term beginning July 1st, 2027, and eligibility for a second 5-year term. Candidates should have a high degree of technical accounting experience along with an understanding of global financial reporting. Those interested can find more information on our website, accountingfoundation.org. Submissions are due by September 1st, 2026, so get on it. I'd like to officially welcome all the new appointees and wish them well in their new roles. So now let's move to our regular agenda. The first item of business is to approve the minutes of the board's May 20th meeting. And from the board, may I have a motion?
So moved.
Second.
Second. All in favor, aye?
Aye.
Aye.
Any opposed or abstain? All right, the motion carries. All right, let's move forward to reports from FASB, FASAC, and GASB, and let's start with Rich.
Hi, Diane. Thanks for giving me the opportunity to give an update on the FASB second quarter activities. As we've discussed before, high quality standard setting begins with high quality stakeholder input. The earlier we engage with investors, preparers, and auditors, the better we can define issues, identify practical solutions, and develop standards that provide material information at a reasonable cost. This engagement also promotes timely standard setting. By understanding stakeholder needs early in a project, we can focus our efforts on the issues that matter most and move standards through our due process more efficiently. The board's work during the second quarter reflects that approach. Guided by feedback from our 2025 agenda consultation and other outreach efforts, we advanced several priority projects, voted to issue proposed accounting standards updates on 8 projects, released 2 proposals for comment, and issued 2 final standards. Suffice it to say, it was a busy quarter. One area of focus has been ensuring we remain responsive to emerging issues. To support that objective, I had previously added a research project on current trends and emerging issues to our research agenda. This effort provides additional transparency into the work we do to monitor changes in the financial reporting environment and assess whether our standards continue to meet stakeholder needs. That outreach, coupled with other initiatives, has already contributed to new technical agenda projects on private credit disclosures, power purchase arrangements, and contractual sales restrictions on equity securities. We also, as I noted, released 2 proposed ASUs during the quarter. One would improve discount rate guidance for certain market return cash balance plans, and the other would better align hedge accounting guidance with how companies manage risk. Both proposals are currently open for stakeholder feedback. In addition, we issued 2 final standards. One addresses accounting for environmental credit obligations and environmental credits, and the other clarifies the accounting for certain paid-in-kind dividends on preferred stock. The latter project originated from an emerging issue task force recommendation demonstrating the continued value of the EITF in addressing focused accounting issues efficiently and effectively. Of course, our work does not end when a standard is issued. Monitoring, implementation, and evaluating outcomes are equally important parts of our mission. During the quarter, we held the stakeholder roundtables on both CECL and our disaggregation of income statement expenses, or DICE standard. These discussions provided valuable feedback on implementation experiences and the effectiveness of the guidance. The insights gained will be applicable to help inform the board not only for potential future standard setting, but as we monitor implementation activities and understand other ways that we can improve the standard setting process. During the quarter, we also issued our annual investor outreach report that details our investor outreach activities over the past year. Since issuing our first report back in 2021, the FASB is engaged in more than 2,475 investor interactions. Yes, we counted them. And substantially all of those interactions were the result of FASB-initiated outreach aimed at soliciting a wide range of investor perspectives. As we mentioned at the last meeting, we also had a chance to welcome Kathy Shakespeare to our board, whose term as a board member began on July 1st. And before closing, I'd be remiss if I didn't congratulate Hillary Salo on her selection as the next chair of the FASB, effective July 2027. I can't think of a more qualified person to lead the board into the future. Hillary brings deep technical expertise, sound judgment, and a strong commitment to our mission. And over the coming year, we will work closely together to ensure a smooth and seamless transition. In closing, the board's progress this quarter reflects the value of stakeholder-informed standard setting process. By engaging broadly, applying our agenda criteria, and focusing on timely, cost-effective improvements, we continue to advance our mission of providing investors and other capital allocators with better information for better capital allocation decisions. With that, Diane, that completes my report, and I'm happy to answer any questions from the trustees.
Thank you, Rich. Do we have questions for Rich? Pratt.
Hi, Rich. So I recognize that the FASB has added projects related to stablecoins and the accounting for transfers of digital assets. Do you believe the current gap is keeping pace with the rapid growth of digital assets?
Yeah, that's certainly our objective, Pratt. Back in 2023, we did our first standard setting related to digital assets, which required entities to report certain digital assets at fair value. That was in response to significant input that we received from stakeholders in the marketplace. We now have 2 other projects, one related to stablecoins as cash equivalents, which I believe the exposure draft just went out this morning. So it's a chance for our stakeholders to weigh in on that. And we have another in-process project related to transfers related to digital assets, which we'll be talking about at our board meeting tomorrow. So as we follow those, we have timely added projects to our agenda as we've seen a need for guidance in the marketplace. There was pre-existing guidance that was applicable, but when we heard that there were improvements that could be made, I think that's something that our board looked at carefully and made decisions to address through standard setting. And so we're progressing, and I anticipate doing so in the future if needed.
Thanks, Rich.
Okay, Mark.
Yeah, thank you, Diane. Rich, on the topic of AI, many companies are increasingly relying on AI to make estimates, forecasts, and operational decisions that ultimately affect financial statements. What accounting or disclosure challenges posed by AI concern you the most? And then do you see a need for new FASB guidance in the AI area?
Yeah, and Mark, when I think of AI, I probably split it into two categories. One for the companies whose business is AI, meaning they're possibly building a data center or they're an artificial intelligence type company that's using cloud services and data centers as part of it. And when it comes to those entities, we do have some specific standard setting and process related to power purchase arrangements and consideration payable to a customer. And we're also, as part of research project, monitoring that just because it is such a seismic event for our economy and making sure that our existing standards are fit for purpose. On the other side, it's the people who are using AI. And to the extent that people are incorporating it into their business and using it to facilitate what they're doing. We do have newly issued guidance related to software, which I think will be helpful to the extent that people are doing customizations related to AI via software tools. The other part of it, though, is to the extent it does change how people process their accounting. I think it will raise some issues. I think some would say, hey, does this mean it'll make the cost of information less expensive? I think to be seen, right? We're waiting to see about that. The other is, will it make it more available and easier for an investor to analyze? Again, that we're certainly monitoring that, and we're certainly hearing of some advancements there. So that's something we're keeping in mind. But I think the third element, which will be kind of interesting, and it may rise more as an internal control audit issue first before an accounting issue, is once processing goes into an AI type tool, what's the trail behind it? How do you verify the controls? How do you look at it either from a control perspective and or from an audit perspective? And does that have an effect on how we write our standards and the expectations we have in our standards? So I think that's another one that we're monitoring and looking at.
Thank you, Rich.
Excellent. Manju and then John Ball.
Hi, good afternoon, Rich. I recently had an opportunity to attend the joint IFRS and FASB meeting that you hosted in Norwalk. So coming out of that meeting, I had a question. With many large multinational companies reporting under IFRS standards outside the United States, do you believe the current degree of convergence between US GAAP and IFRS is appropriate, or do you feel that there should be greater alignment and it should be a priority going forward?
So I guess I'll answer that a couple of ways. The first is, do I think where we are is in a good spot? Yes, I do. Do I think that there's room for improvement? Absolutely. I think to the extent that the same transactions are occurring around the world, there's a fair question, should the accounting be the same? And if you have a US multinational that has a foreign sub and has to do the accounting twice, that certainly gives you pause. The question is, how do you better align those? I think as you saw from that meeting, there's great sharing of information between both the FASB and the ISB. To the extent that one is developing a solution, we certainly share it with the other. Ultimately, though, do we bring those standards together or not? That's a question for both boards, right? It's not a one-way street. And it's something that I think we're definitely focused on as we're setting standards as part of our cost-benefit analysis. In the ISB, by the same instance, as they're setting standards, I think it's a fair question. Are they aligning or diverging from US GAAP? And are they considering that as part of their cost-benefit analysis? So I think it's something we're focused on. So I think we're in a good spot, but I think there is always room for improvement, particularly if we can take out some unnecessary cost and complexity from the system.
Yeah.
Great. John Ball.
Thanks, Don. Hey, Rich. So there are stakeholders that argue that private companies face different costs and user needs than public companies. So the question is, how does FASB continue to balance the desire for consistent accounting standards with the practical realities faced by these private companies?
Yeah, John Bull, I think it's a good question, and I think it's a challenge, to be fair. I think we're very fortunate, though, that we have a very engaged group of stakeholders, including our private company council, there to help us with that. I think we'd all acknowledge that to the extent you have different users with different needs between public and private companies, you need to listen to them. And to the extent that you're hearing different information, you may reach a different cost-benefit analysis answer when it comes to an accounting issue. And that's something we're focused on. I think the PCC does a tremendous job of outreach with the private company community. We spend a lot of time with the PCC, got a lot of great recommendations from them. But by the same instance, I think the FASB board itself is also focused on that. And we recognize that there can be different cost-benefit considerations when setting standards. Ideally, we'd like one set of GAAP to rule them all, but from a practical matter, there will be needs for differences. And to the extent that we identify those, I think that's something that we as a board need to consider and make.
Great. Thanks, Rich.
Right. Any more questions for Rich? Okay. Not seeing any. Why don't we turn to the next item, which is the GASB chair report. Joel?
Thanks, Diane, and great to see everybody. Good afternoon. Appreciate the opportunity, as always, to update you on the GASB's activities for the second quarter. We had 2 exposure drafts that we had issued in the first quarter, and the comment periods for both of those exposure drafts closed in the second quarter, and we got some really good feedback. The first was an exposure draft for a proposed statement on infrastructure assets. We had a 93-day comment period. We received 81 comment letters, and we actually began in June, which continued and concluded in July, a series of 3 public forums where we had roundtable discussions between the board and our staff with a cross-section of preparers, auditors, and users who had reflections and comments and thoughts on the proposal for infrastructure assets. So a lot of really great constructive feedback for the board from those comment letters and from the participants in the public forum. So I certainly thank all of our stakeholders who are participating in our due process. The board will now take that information and begin redeliberation in preparing towards issuing a final statement, hopefully by mid-2027. The second exposure draft we had out was a proposed implementation guide related specifically to subsidies within and as governments implement Statement 103 in fiscal year 2026. That exposure draft of that, the comment period for that exposure draft lasted 76 days. We got 94 comment letters on that, kind of a lot for an implementation guide, a lot from the preparers, in particular in the healthcare sector. The board has since redeliberated based on that feedback, taken one of the questions out that had a lot of feedback for us to contemplate further action related to that in the future. The remaining questions and answers are moving forward to a final implementation guide to be issued in early September. We did make some other modifications, but those remaining Q&As that were exposed are moving forward into that final implementation guide with some clarification based on our feedback. And late in the first quarter, our advisory council did its annual prioritization of the projects they believe we should be working on, standard setting projects. And the board remains very focused on working on projects that only create significant improvements in the financial report, understanding that our stakeholders are challenged for resources, and we only want to ask them to use those on a changing GAAP when the improvement is significant. Those improvements can be new or different information requested by the users. The external financial report is the right place for that information. Our infrastructure asset project is an example of that. Another way we can make significant improvements is a gap in GAAP, some new type of transaction for which maybe we need better guidance to help stakeholders account for these new or evolving types of transactions or items. And third, we can also significantly improve the report potentially by simplifying or reducing requirements. And from the GASAC prioritization, out of the top 6 items, we did take 3 items from that and move them onto our pre-agenda research, the research part of our technical plan. Those 3 items included digital assets, which is an example potentially of a gap in GAAP or something new, and maybe we could have standard setting implementation guidance or maybe no project, depending upon how governments are using those items. Through our monitoring, we do have some idea of what's going on in that area. We want the research to really expand and have a more fulsome view of the pervasiveness of different types of digital asset use, and then examine potential standard setting path forwards for those. Again, maybe implementation guidance for some, maybe a standard setting project for some use cases, and then maybe other use cases aren't prevalent enough yet for standard setting. The second item added to our pre-agenda research technical plan was the financial reporting entity. The GASB has told us there's a lot of kind of complications in there. So our research is really trying to understand how could we maybe improve the guidance to improve the applicability of the practical applicability of that, pretty technical detailed guidance. The third item could lead to a potential simplification. This really was born out of our post-implementation review of the pension and more recently OPEB standards, and that is us performing research on the effect of deferred inflows and deferred outflows related to pension and OPEB liabilities and their impact on expense. We're really trying to analyze, there's a lot of cost through the post-implementation reviews to tracking those deferred inflows and outflows. Those deferred inflows and outflows have the effect of spreading the change in the net pension or OPEB liabilities over the current and future periods. If we just recognize all of that change in the current period, how different would the expense be given that the layers of deferrals kind of go in and out? And so that's really the first phase of that research, to ultimately maybe look at the cost benefit of an item within those standards that our PIR showed us was very costly. Really want to make sure that the benefit is there, or maybe there's standard setting to create some simplification there. Last thing on our pre-agenda research, we added those three to it. We did remove one as we concluded research on cyber security risk disclosures, something that had been highly prioritized by our advisory council. In the end, the board concluded, based on the research provided, that there just wasn't a path forward for standard setting that didn't involve either disclosures that were kind of boilerplate and such high level and educational so as not to have any meaningful impact on users' information, or two, the other end of the spectrum is the disclosure would provide information in a public report that would inform bad actors and actually increase the cybersecurity risk or threat to specific governments because of the information they disclosed. So we couldn't find the sweet spot that wasn't either of those two. And so the board declined to undertake standard setting as it relates to cybersecurity risk disclosures. My final conclusion, like Rich, we had a new board member join us July 1st, Lisa Washburn. She has hit the ground running, and we love having her expertise added to the board. With that, that concludes my presentation on the GASB's activities. Happy to answer any questions that anyone may have.
Thanks, Joel. Manju.
Hi, Joel. Good afternoon. So in your report, you just mentioned that the exposure draft on infrastructure assets, the comment period had ended. And in addition to that, you also had several public forums. The GASB board had public forums on that topic. I know that you received a lot of input, 80 plus comment letters with a lot of details. Can you please summarize for us, like, what themes emerged out of those, 80 plus letters that you received?
Sure, Manju. A lot of good details in there, right? And we'll go through each and every one of them. But I would say as themes, the users broadly saw a lot of the benefits that we expected them to receive from the proposed new information and disclosures, although some users felt like we maybe should have gone further, including there was one disclosure that was in the preliminary views that we took out for cost benefit reasons, but many users wished that had stayed in. And then on the preparer kind of auditor side, maybe the preparer side, I would say many of them, not all, but many of them see the benefits of the additional information and the new requirements that are proposed. Some often question, is the cost of that really exceeding the benefit in some or maybe other cases. And so I think the board, has thought about that all the way through, but certainly we'll continue to take that feedback in and evaluate, are there any more ways in which we can minimize costs related to that while maximizing the benefit of new information.
Interesting. Thank you.
Thanks, Manju.
All right. Louis.
Thank you, Diane. And Joe, thanks for your presentation. We're aware that GASB is working on the voluntary digital financial reporting or taxonomy initiative. Do you have any reaction to the joint rules passed by the SEC and other agencies in June of this year as to the Financial Data Transparency Act?
Thanks, Luis. Yeah, certainly our taxonomy project continues to move forward irrespective of FDTA, but we have monitored both the joint rule and continue to interact with the Office of Municipal Securities of the SEC as they contemplate the more specific agency rulemaking, for which the clock has now started since the joint rules were passed in June. And we have good dialogue with them. They seem very interested in working with us. But specifically to your question on the joint rules, we don't believe that anything in the joint rules really impinges on the SEC's ability to, as it relates to financial reporting, or potentially using our taxonomy if they want to. Nothing impinges on them on doing what they feel like they want to do and what is best for the municipal securities environment, including as it relates to maybe using our taxonomy. So we were happy with the joint rule not having, in our view, from our perspective, having any impingement upon our taxonomy project or the SEC's potential use of it.
Thanks, Joe. Greatly appreciate it.
All right. Any more questions for Joel? All right. Seeing none, let's go on to the next item, the FASAC chair report. David?
Hi, Diane. This is Alicia Manders. David is unable to join, so I'll be providing the FASAC chairman's report today on behalf of David.
Terrific. Thank you, Alicia.
Thank you. I really appreciate everyone's attention and all of your work and efforts, and just wanted to give you an overview and perspective of our activities. There was a written FASAC chair report for the second quarter that was provided in your materials, and a written report for the first quarter that was provided earlier this year. Today, I'm going to highlight the activities that occurred throughout the first half of this year, as well as our plans for the upcoming meeting. As you may recall, we made a change to our planned FASAC meetings earlier this year. Specifically, the FASB and FASAC chairs decided to extend our in-person September FASAC meeting and to cancel the June meeting to better align FASAC's discussion time with the FASB's agenda and ensure the most effective use of members' time. So briefly rolling the clock back a little bit and going back to our March meeting, which included our newly appointed members, that discussion focused on two key areas. One was related to the FASB's standard setting process, specifically on the criteria used by the board in deciding whether to add a project to its technical agenda. And in that discussion, overall, council members had observations that the agenda decision criteria should involve judgment, and it should be considered collectively, particularly when there's areas of emerging areas and areas where practice is still evolving. Members also suggested that issues that affect a relatively small set of entities may still warrant attention when the accounting is complex to apply, or if it produces results that are challenging to explain to investors, or if it appears to be misaligned with the economics of a transaction. And they noted that the EITF could continue to be used and leveraged in those less pervasive issues. Members also made observations about emerging issues, and they noted that improvements to disclosures could be a timelier response from a board perspective, rather than recognition and measurement changes when appropriate. Members also discussed the board's evaluation of potential topics that are broad versus narrow, and there were some observations and suggestions to balance a portfolio of large projects that are highly pervasive with more narrow topics. Others raised challenges related to multi-phase projects as well. The second broad area was a session on current macro trends and economic developments and their potential financial reporting implications. And so that ties in really well with what Rich had mentioned related to the emerging research areas. Council members considered whether current disclosures sufficiently capture the uncertainty associated with some emerging trends, and then specifically discussed some of the areas that we've talked about today, including the accounting related to the data centers, where there's multiple parties involved, and the related disclosures, accounting related to the increase in investment for artificial intelligence and whether related investments should be capitalized, as well as the disclosures around private credit. The March meeting also included a continued discussion on the effects of the use of technology in standard setting, as well as the FASB's progress on considering stakeholders' feedback in response to its 2025 agenda consultation. So at our upcoming FASAC meeting, which is scheduled for Thursday, September 17th, we anticipate that the key topics for broad discussion will be disclosure effectiveness, the use of management intent in financial reporting, as well as the implementation of the disaggregation of income statement expenses, or DICE. We also anticipate having continuing discussions on AI and technology, current trends and emerging issues, and the progress on the board's consideration of the agenda consultation feedback. We also recently solicited nominations for council member vacancy, or FASAC vacancy, for terms that would begin in January 2027, as well as for our future succession planning through an open nomination process, and requested that nominations be submitted by Friday, August 28th. Over the years, those nominations have come from a variety of sources, including from the public website, through nominating organizations and individuals, from present and past FASAC and FASB members, as well as trustees. So if you have any additional candidates that you did not have a chance to share, we'd welcome any additional suggestions in the next week or so. With that, that concludes my report, and I'd be happy to take any questions.
Thank you, Alicia. Questions for Alicia? All right. Seeing none, thank you very much. Appreciate you filling in. Awesome. All right, on to the next, the Oversight Committee report. And I think, Manju, I think you will be reporting out for us.
Yes, thank you, Diane. The Standard Setting Process Oversight Committee convened virtually yesterday, August 17th, for its regularly scheduled meeting. During the session, we received comprehensive reports from FASB Chair Rich Jones, GASB Chair Joel Black, and FASB Liaison to PCC Sue Cosper. These updates provided valuable insight into the current priorities, challenges, and accomplishments in their respective areas. In addition to these reports, as part of our ongoing commitment to transparency and accountability, the committee reviewed and discussed meetings that trustees observed over the past quarter. This practice has ensured that trustees remain actively engaged and well-informed about the standard setting process. Overall, the committee and its participants engaged in meaningful and productive discussions with both FASB and GASB leadership on a range of important topics. These conversations reflected our shared commitment to upholding the integrity and effectiveness of the standard setting process. For stakeholders and members of the public interested in learning more, a recording of Monday's public session is available on the FAF website. Now, with regards to FASB update, the committee received the report from Chair Jones and FASB Technical Director Jackson Day. They discussed the FASB's progress in the last quarter. Many of these matters have already been covered in FASB Chair Jones' report earlier during this session. The primary topics reviewed by the committee included an overview of the FASB second quarter technical agenda activity, including the addition of 7 projects, completion of 2 projects, and issuance of 2 exposure drafts, with several additional exposure drafts expected later this year. Significant standard setting activities, including recently completed standards on paid in-kind dividends and environmental credits, and a review of the list of upcoming proposals. We also got an update on 25 agenda consultation, including outreach with more than 200 stakeholders, feedback from more than 130 comment letters and outreach discussions, and continued progress toward issuing an agenda consultation report in 2026. Post-implementation review activities focused on credit losses, including the May 12th public roundtable on CECL, a stakeholder survey on implementation and ongoing application, and continued monitoring of related issues. Closed session matters included how the FASB identifies and monitors emerging issues, transition planning for projects expected to continue beyond June 2027, and regulatory developments that may affect future standard setting. With regards to GASB update, the report committee received from GASB Chair Joel Black and GASB Director Alan Skelton reviewed the main highlights of the past quarter. Again, many of these matters have already been covered by GASB Chair Black's report during this session. The primary topics reviewed by the committee included as follows: highlights from GASB's second quarter activities, including the close of comment period for infrastructure assets, exposure draft and the implementation guidance on financial reporting model, improvements related to subsidies, as well as the start of public forums on infrastructure assets. Updates on GASB's technical agenda and research activities, including continued work on revenue expense recognition, infrastructure assets, going concern uncertainties, and severe financial stress, implementation guide update, and voluntary digital financial reporting. New and continuing pre-agenda research, including pension and OPEB disclosures, the effects of deferrals on pension and OPEB expense, digital assets, financial reporting entity, and gap structure, along with the board's decision not to move forward with a cybersecurity risk disclosure standard setting project at this time. Post-implementation review activities, including progress towards the final OPEB PIR reports, surveys of the fiduciary activities PIR, and preparation of preparer service of the leases PIR. And with that, I will turn things back to you, Dalian.
Okay. Thank you, Manju. I think we'll go to the next report, which is our Executive Director report. Erin?
Yes, thank you so much, Diane. Good afternoon to all of you, and thank you for the opportunity to provide some highlights for major activities at the Financial Accounting Foundation since our last meeting in May. First matter is with respect to international leadership. As many of the trustees here know, one of the goals in the strategic plan is to demonstrate leadership in global financial reporting. To that end, FASB Chair Rich Jones and I traveled to Montreal in June with a delegation of FAF trustees to meet with our counterparts from the International Accounting Standards Board and the International Financial Reporting Standards Foundation, the IFRS. The trustee-to-trustee meetings enable both sides to explore topics of mutual interest. These included important subjects like funding, the independence of standard-setting boards, oversight roles, and stakeholder engagement. I'd like to personally thank FAF Chair Dalia Blas and FAF trustees Diane Norden, Brian Lewis, and Manju Ganeriwala for setting aside time from their schedules to participate with Rich Jones and I in this important meeting. I should also note that this meeting complements the interactions that the FASB board members and its staff have with IASB board members and staff on a regular basis. FASB takes its role as a global leader in standard setting extremely seriously and communicates frequently not only with the IASB, but with other national and multinational standard setting organizations. One of the other areas that's of incredible importance is stakeholder outreach. Rich and Joel both talked about the amount of stakeholder engagement they have in conducting their standard setting missions. So too, we feel responsible for that activity. FAF Chair Dalia Blas and I continue to conduct outreach to ensure we hear directly from stakeholders about their views on our standard setting boards and their activities. These are incredibly enriching conversations about how we can do an even better job of fulfilling our mission. We have individually and collectively met with more than 100 different stakeholders over the course of 2026. With a set of stakeholders as diverse as ours, different groups have diverging perspectives about our work and where we should do and where we should place our priorities. However, one thing is very clear. Stakeholders hold our standard setting boards in very high esteem. They believe that our standard setting process is critical to our properly functioning capital markets, and is a key reason why FASB and GASB standards are admired around the world. Our stakeholder outreach will continue throughout the rest of the year and will continue to inform our decision-making as an organization. So a sincere thank you to all the stakeholders who have engaged with us, and please never hesitate to reach out to us. The FAF also published its 2025 annual report in May, recapping an eventful year in which our standard-setting boards made significant improvements to financial reporting, and we also experienced some senior leadership changes at the FAF, including me and my appointment, and Dahlia Blath and hers. The annual report, entitled Standards That Work, Our Voice, Your Voice, Our Commitment, highlights the important role that stakeholders play in our standard-setting mission. The report, which is available on the FAF website, also includes our full audited financial statements for the year. And in that regard, I'd like to just complete this update with ensuring all of you know that we are aware that we must be careful stewards of the financial resources provided to us by payers of accounting support fees. We do not take these resources for granted, and we know that we must deliver on the promise of high-quality financial accounting and reporting standards crafted by an efficient and effective organization. Mm-hmm. This concludes my report to the trustees, and I would be happy now to take any questions you may have.
Any questions for Erin?
Thank you.
I don't see any. Thank you, Erin. Thank you. And thank your team as well. All right. So this is the end of the public session of today's FAF Board of Trustees meeting. Thank you again to those of you who tuned into this webcast. And finally, let me remind everyone that the next FAF Board of Trustees meeting will be held on Tuesday, November 17th in Norwalk, Connecticut. Thank you all and have a great day.